Hello, and welcome. Today, we're going to talk about something crucial for your future: managing your money. The world of finance often seems incredibly complex, filled with jargon and intimidating strategies. It might feel like you need an advanced degree just to understand where to begin. But here's the secret: the financial game is remarkably simple at its core. It's not about intricate algorithms or predicting market shifts. It's about understanding a few fundamental principles and consistently applying them. Embracing this straightforward approach offers a powerful and sustainable path to financial well-being. This isn't a get-rich-quick scheme, it's a foundation for lasting prosperity. Sadly, this elegant simplicity is often overlooked in favor of overly complex strategies and speculative promises. Many people are led to believe that achieving financial success requires insider knowledge or risky gambles. They chase fleeting trends and get caught up in the hype surrounding complex investments. This distraction often keeps them from the very strategies that actually work. Financial gurus, expensive advisors, and sensational headlines constantly promote complicated formulas. They often obscure the clear, actionable steps that truly build wealth over time. Our goal today is to cut through that noise and empower you with real clarity. We're going to break down the supposed complexity into 4 fundamental rules. These aren't just theories, they are the bedrock of lasting financial results. These rules are accessible to everyone, regardless of your current income or financial background. Understanding and applying these principles will give you an incredible advantage. They will demystify personal finance and put you firmly in control. You'll soon see that building wealth doesn't have to be a mystery. Let's dive into the 4 essential pillars that will guide your financial journey. These principles work together to create a robust and resilient financial plan. Master these, and you'll be well on your way to securing your future. This might sound obvious, but it is truly the cornerstone of all financial success. You cannot build wealth if your expenses consistently outweigh your income. This rule forms the absolute basis of financial stability. It requires conscious budgeting, not as a restrictive chore, but as an empowering tool. Budgeting helps you understand exactly where your money is going each month. This awareness is the first step toward making intentional financial choices. Tracking your expenses diligently is key to this process. It reveals spending habits you might not even be aware of. This isn't about deprivation, it's about making informed decisions that align with your financial goals. You must make informed choices about your spending, prioritizing needs over wants. Evaluate every purchase and ask yourself if it truly serves your long-term objectives. This discipline frees up funds for more impactful uses. By consistently spending less than you earn, you create a financial surplus. This surplus is the excess money left over after all your expenses are paid. It is the lifeblood of your financial future. This surplus acts as the fuel for all subsequent steps in your wealth-building journey. Without it, the other rules simply cannot be applied effectively. Think of it as the raw material for your financial growth. Once you've mastered the art of creating a surplus, the next crucial step is to invest that difference. Allowing your money to sit idle in a savings account, especially with low interest rates, means it's losing purchasing power to inflation. Investing your surplus is absolutely crucial for genuine financial growth. Investing puts your money to work for you, allowing it to generate more money. This is often referred to as passive income or making your money compound. You are literally planting seeds for future financial harvests. This strategy allows your wealth to grow significantly over time, rather than just keeping pace. It's the difference between merely holding money and actively building capital. This growth happens even when you're not actively working. It leverages the incredible power of compounding, often called the 8th wonder of the world. Compounding means your earnings also start earning returns, creating an accelerating snowball effect. The sooner you start, the more powerful this effect becomes. Investing the difference does not necessarily mean complex stock trading or trying to pick individual winners. You don't need to be a Wall Street expert to begin. There are simpler, highly effective avenues for beginner investors. You can start with simple, low-cost index funds or exchange-traded funds, known as ETFs. These funds automatically diversify your investment across hundreds or thousands of companies, reducing risk. They offer broad market exposure without requiring constant attention. These options include other diversified investment options such as target date funds or broadly diversified mutual funds. The goal is consistent, broad market exposure, not speculative gambles. Simplicity often trumps complexity in long-term investing. This rule is a true secret weapon for long-term financial success. Lifestyle inflation is the tendency to increase your spending as your income grows. While it's tempting to upgrade everything, resisting this urge is critical. As your income increases, resist the urge to immediately upgrade your lifestyle to match it. A bigger paycheck doesn't automatically mean bigger expenses. Many people fall into this trap, negating their increased earning power. Continue to live below your means, even as your earnings climb higher. This means maintaining a similar standard of living as your income grows. The gap between your earnings and spending becomes even wider. Instead of spending your extra income, channel it directly into your investments. Every raise, bonus, or unexpected windfall should be largely directed towards building your financial future. Make saving and investing your priority. This disciplined approach allows your wealth to grow exponentially, not just incrementally. Each increase in income becomes a catalyst for greater investment, accelerating your progress towards financial freedom. You're building a stronger financial engine. Avoiding lifestyle inflation also creates a vital buffer against future financial setbacks. A larger investment portfolio provides security and options during unexpected life events. It's like having a financial safety net and a springboard all in one. Ultimately, this strategy provides greater financial freedom and flexibility in the future. You're not trapped by ever-increasing expenses, constantly needing a higher income just to maintain your current lifestyle. You gain true independence. Patience is not just a virtue, it is absolutely paramount in the financial game. This isn't a sprint, it's a marathon that requires endurance and a long-term perspective. Wealth accumulation doesn't happen overnight, despite what some might promise. The financial game is inherently a long-term endeavor, demanding consistent effort over decades, not months. You are building a significant asset over time, brick by brick. This takes dedication and foresight. Market fluctuations are an inevitable part of investing, characterized by periods of growth and temporary declines. These are normal, natural occurrences in any economic cycle. Trying to time these movements is often a losing battle. During slow periods, progress may seem frustratingly slow or even non-existent. There will be times when your portfolio value dips, and it can feel disheartening. These are the moments when patience is most tested and most vital. It requires staying the course through all the ups and downs of the market and economy. Do not panic sell during downturns, instead, view them as opportunities to buy assets at a lower price. Consistency is key. This involves consistently investing over time, regardless of market conditions. This practice is known as dollar-cost averaging, reducing the impact of volatility. Regular contributions smooth out your average purchase price. It demands avoiding impulsive financial decisions driven by fear or greed. Emotional reactions to market news can quickly derail a well-planned strategy. Stick to your plan, even when it feels uncomfortable. By exercising patience, you allow the power of compounding to truly work its magic over many years. You reap the immense rewards of a disciplined, long-term approach. Your future self will undoubtedly thank you for it. So, why do these seemingly simple rules consistently outperform complex strategies? It's because they tap into fundamental truths about how wealth is built and sustained. This framework is built for real-world application, not just theoretical discussions. This approach rejects the allure of complicated formulas and secret strategies often peddled by financial gurus. You don't need a mystic oracle to guide your financial decisions. The answers are far more straightforward. It dismisses any reliance on market predictions or trying to forecast economic trends. Nobody can consistently predict the future, and attempting to do so often leads to poor decisions. Focus on what you can control. Furthermore, it avoids the constant need for expensive financial advisors who may overcomplicate things or charge excessive fees. While good advisors have their place, this framework empowers you to manage your core finances independently. You become your own most effective advocate. This framework empowers individuals to take direct control of their finances without feeling overwhelmed. It puts the power back into your hands, where it belongs. You are the ultimate captain of your financial ship. These principles are based on fundamental, time-tested truths that have been proven across generations and various economic cycles. They aren't fads, they are enduring wisdom. This stability provides immense confidence. This simple framework builds credibility because it is grounded in reality and proven principles, not speculation. It deals with tangible actions and measurable outcomes. You can see the direct impact of your efforts. It emphasizes consistent, disciplined action over flashy, high-risk tactics. True wealth is often built through diligent, steady effort rather than dramatic, instant successes. Slow and steady often wins the race. You are encouraged to focus on building a robust financial foundation rather than chasing fleeting gains. This solid base provides security and allows for sustainable growth. It's about enduring strength, not temporary excitement. This entire approach is especially great for beginners because it removes the intimidation factor often associated with personal finance. It simplifies a topic that many find daunting. You don't need to be an expert to start. It provides a clear, actionable plan that anyone can understand and implement immediately. You can start applying these rules today, right where you are. There's no need to wait for a perfect moment. The rules are easily understandable and implementable by anyone, regardless of their financial background or starting point. This accessibility is a core strength of the framework. It's finance for everyone. This simplicity means it's applicable regardless of your current income level or existing financial knowledge. Whether you're just starting your career or looking to refine your habits, these principles hold true. They adapt to your circumstances. By following these guidelines, you will effectively build a solid financial foundation for your future. This foundation is resilient and adaptable to life's changes. It sets you up for lasting security. Ultimately, this framework facilitates achieving your long-term financial goals, whatever they may be. Whether it's early retirement, buying a home, or creating generational wealth, these rules are your guide. Your financial destiny is within your grasp. So, don't let anyone tell you that finance is too complicated for you. The game is simple, and now you have the rules. Start today, stay consistent, and watch your financial future transform.